Welcome, candidates, to the Advanced Auditing and Assurance revision session. We are answering questions from the April 2024 sitting. It's my hope that we've gone through question number 3. During our last session, we answered question number 2. I read question 3A. Thermotech Boilers is an engineering company specializing in designing, fabricating, supplying, installing, and servicing of boilers, insulators, and steam systems. The company has 8 production plants in different parts of the country. The production process is capital intensive and requires a broad range of plant and equipment. The finance director is responsible for the preparation of detailed annual budget for property, plant, and equipment, which is based on a 5-year budget and approved by the board of directors after consultation with an audit committee. Once the budget is approved by the board, it is held in a computer file, which is the basis of any purchase. When equipment is delivered to the company, a pre-numbered goods received note is raised and a copy is sent to the accounting and finance department. This note is used to update the PPE budget to reflect the movement. The equipment is carefully inspected by the production personnel and tested if operating properly. An operational certificate is prepared by the production department and is used by the accounting and finance department together with the GRN to check against the purchase invoice when it's received. At the same time, the purchase invoice enters the purchase system. The computerized PPE register is updated. Access to the PPE register is restricted to the personnel in the accounting and finance department. On regular basis throughout the year, the PPE register is compared to the plant and equipment on site by the accounting personnel using identification numbers in the register and permanently marked on each item in the factory. The internal audit department also tests on a sample basis the operation of the system from the budget preparation to entry in the PPE register. Internal audit staff also compare a sample of entries in the PPE register with the equipment in the factories. As part of your work as external auditors, you have reviewed the PPE audit program of the internal auditors and come to the conclusion that the basis of their testing is representative sample of purchase invoices. Required: 1. Identify 3 strengths in Thermotech boilers control environment in the area of PPE and explain how each of the strengths reduces the control risk. 6 marks. 2. Citing 4 reasons, explain why testing of representative sample of purchase invoices to prove completeness of PPE records is not sufficient. 4 marks. So that's it, candidates. In Roman 1, you are to identify strengths and explain how each of the strengths reduces the control risk. Tell me, what do you think are the 3 strengths and how each strength reduces the control risk? Identify 3 strengths. First of all, what are the 3 strengths that you can pick from this case? Now, candidates, will just help you understand the question, I think we need to define control risk. The question says, explain how each of the strengths reduces the control risk. What is a control risk? Control risk, candidates, is the risk that a misstatement that could occur in an account balance or a class of transactions and that could be material will be prevented, detected, and corrected on a timely basis by the entity's internal control system. You understand? A control risk is the risk that a material misstatement that could occur in an account balance or even in a class of transactions, all right, will be prevented, detected, and corrected by the internal control system. Do you understand the meaning of control risk? So the question here is, what are the three strengths in Thermotech boilers control environment? We've been given information on the controls that this company has put in place to reduce the control risk. And we say that this is a risk that could be detected and corrected by the internal control system. You understand the question? And the candidates, I know we are always used to being given a case that have weaknesses. Then you are told to identify the weaknesses in the internal control system. But this one, you are given a case and you are asked to identify strength. So what, in your view, could be the strength? Felista, of course, you've said that there is a strong control system safeguarding assets. That is an objective. What you said is an objective. That is the objective. An internal control system is to safeguard the assets of a company. That's the objective. The question is, what are the strengths in this system? And the good thing, candidates, with such a question, you see, the answers are just within the case. You don't need to think outside the information provided. Look at the information provided. That we read, Thermotech Boilers is an engineering company specializing in designing, fabricating, supplying, installing, and servicing of boilers, incinerators, and steam engines or systems. The company has 8 production plants in different parts of the country. The production process is capital intensive and requires a broad range of plant and equipment. Broad range of plant and equipment. The finance director is responsible for the preparation of a detailed annual budget for property, plant, and equipment. That is where the information on the internal control systems begins. The first paragraph is just a preamble giving us information on what the company deals in. But the first sentence there is, the finance director is responsible for the preparation of a detailed annual budget for PPE, which is based on a 5-year budget and approved by the board of directors. Candidates, that is a strength. Detailed annual budget for PPE. Detailed annual budget for PPE. The first sentence, you get the answer. The finance director is responsible for the preparation of a detailed annual budget for PPE. So detailed annual budget for PPE is a strength. The preparation, candidates, of a detailed annual budget on a 5-year budget and approved by the board of directors demonstrates a commitment to planning and control. You understand? And how is it a strength? All right? How is it a strength? How is it helpful? The preparation of a detailed budget. What is the importance? How does it reduce the control risk? Now, candidates, the preparation of a detailed annual budget reduces the risk of unauthorized or unnecessary purchases. And it ensures that the PPE investments align with the company's strategic objectives. So if there is a budget, a 5-year budget on what will be purchased in 5 years, detailed budget, because we've read here that this company, the production process is capital intensive and it requires a broad range of plant and equipment. So this plant and equipment, there is a 5-year budget plan on what equipment will be purchased. That one is a control, so that you don't have accountants buying unnecessary equipment or buying unauthorized equipment. That is a control, because without a budget, the company may end up buying equipment that is not maybe in line with the strategic objectives of the company. Do you understand? That is a strength. You have to identify 3. I think I've given you a hint. Candidates, the answers are within the case. You don't need to think outside this case. What do you think could be the other strength apart from a detailed annual budget for PPE? For PPE. So that was the first sentence. Look at the next one. The next one. We read, once the budget is approved by the board, it is held in a computer file, which is the basis for any purchase order. So that is still on budget and approval, right? Then we read, when equipment is delivered to the company, a pre-numbered goods received note is raised and a copy is sent to the accounting and finance department. So that is a strength. Pre-numbered goods received note. Pre-numbered goods received note. Pre-numbered goods received note. Pre-numbered goods received note. This note is issued to update the PPE budget to reflect the movement. Then we read that the equipment is carefully inspected by the production personnel and tested if operating properly. An operational certificate is prepared by the production department and is used by the accounting finance department together with the GRN. So we have the GRN and the operational certificate. GRN together with the operational certificate is a strength. Having a GRN which is submitted to the accounts department, and having the goods being inspected, and an operational certificate being raised if the equipment is working, that is a strength. Candidates, that's the strength. The use of a pre-numbered GRNs and the operational certificates provides what we call a clear audit trail for PPE purchases. And that enhances accountability and reduces the risk of errors or even fraud, because each transaction can be traced from receipts of goods to payment of invoices. So GRN and operational certificate. Let's read on. We read that the equipment is carefully inspected by the production personnel and tested if operating. An operational certificate is prepared by the production department and is used by the accounting finance department together with the GRN to check against the purchase invoice when it is received. The next sentence reads that at the same time as the purchase invoice enters the purchase system. Listen to that. At the same time as the purchase invoice enters the purchases system, the computerized PPE register is updated. Access to the PPE register is restricted to the personnel in the accounting and finance department. Further, we read, on a regular basis throughout the year, the PPE register is compared to plant and equipment on site by the accounting personnel using identification numbers in the register and permanently marked on each item in the factory. So we have comparison on regular basis throughout the year. On regular basis throughout the year. Listen to that language. The PPE register is compared. So we have regular comparison of PPE register. Regular comparison of PPE register with the physical equipment. Comparing the register with the physical equipment. That is a strength. Regular comparison. Regular comparison. This is comparison, regular comparison of PPE register with physical assets. There is the register, then you compare them with the physical assets. That is a control. The regular, that is like doing a reconciliation, candidates. This is a regular reconciliation of the PPE register with the physical assets, which helps ensure the accuracy and completeness of records. And that reduces the risk of misstatement due to theft, due to loss, or just incorrect recording. Because you may have items in the register, but they are not there physically. So that could lead to misstatements in the financial records. And that provides assurance that the PPE on the balance sheet actually exists. Those are physical controls, candidates, right? And that is a strength. So these are three strengths. But let's read on. We could get another control. The internal audit department also tests on a sample basis the operation of the system from the budget preparation to the entry in the PPE register. All along, we've been reading about the accounts department, all right, the finance department, and now we have another entry of staff, the internal audit. These are different departments. Okay? What does that tell you? Segregation of duties. The segregation of duties between the production department, which raises the GRNs and the operational or inspecting certificates. We also have the accounts department that updates the PPE register. Then we have the audit department, which also tests samples. So segregation of duties is a strength. Segregation of duties. All right? And the candidates have been explaining and continue to explain the strength and how each of the strengths reduces the control risk. So the segregation of duties between the department that is raising the GRNs and the one that is inspecting the equipment. Then you have the department on accounting and finance, which updates the PPE register, which processes invoices, reduces the risk of error and fraud. Because that separation, segregation ensures that different individuals are responsible for different stages of the PPE acquisition and recording process, which makes it more difficult for any single person to manipulate records or even to conceal irregularities. So these are 4 strengths. Roman 2. Citing 4 reasons, explain why testing of a representative sample of purchases invoice to prove completeness of PPE records is not sufficient. Reasons why testing a representative sample of the purchase invoices is not sufficient to prove completeness of PPE records. That is the question. The company just takes a sample of purchases invoice. And what is the objective? The objective of taking that representative sample is to test or to prove the completeness of the PPE records. Felisa says the sample may not be a representative of the characteristic of the entire population of documents and data. Felisa, that is true, but your answer has to be related to the case. That one is tough, eh? Your answers must be related to the case. Purchases invoice is not sufficient. Testing sample of purchases invoice is not sufficient to prove completeness of PPE records. Now, one reason, candidates, is that there could be some equipment that is acquired by other means than purchases. So just checking purchases invoice may not be sufficient to prove the completeness of the PPE records. There could be some other PPE that is acquired through other means than purchases. That is to mean or to say that PPE may be acquired through means other than purchases, such as lease agreements. We may have PPEs that are being received through donations. We could have PPE that is just developed within the company, what we call self-construction. So if you have some PPE that is obtained through maybe lease agreements, the purchases invoices may not be sufficient to check the completeness of the PPE records. You understand? Is that clear? PPE acquired through means other than purchases. PPE acquired through other means than purchases, e.g., I've given lease agreements, donations, or even self-construction. The company may just buy components and construct its own PPE. So the purchases records may not capture the PPE that is received through donations. That is one reason. And when you are auditing, that tells you, candidates, that you cannot just rely on purchases to prove the completeness of assets. The second reason is in relation to the capitalization of PPE. PPE not capitalized. PPE not capitalized. What do I mean? PPE not capitalized. Now, there are some items that meet the criteria for PPE that may be expensed rather than capitalized. We know some accountants may do that, maybe deliberately or by error. By PPE not capitalized, I mean, candidates, we know that all PPEs, plant, property, and equipment ought to be capitalized. But there are times when some equipments are not capitalized, but they are expensed by the accountant, maybe due to error or even deliberate misclassification. So testing only purchase invoices would not identify such items because they would not be recorded in the PPE register. You understand? I know you understand because you've done capitalization of items. That is one reason why testing representative sample of purchase invoice may not be sufficient to prove completeness of PPE records. We are to give 4 reasons. Another reason could be where there is a PPE disposal, the PPE disposal or the PPE that is disposed but is not removed from the records. PPE disposed but not removed from the records. The PPE that is disposed, physically the PPE does not exist, right? But the register still has record of such PPE. Because you know that PPE that has been disposed may not be promptly removed from the register, leading to an overstatement of PPE. So just testing the purchase invoices would not detect such an issue because the invoices only focuses on additions rather than disposals. Do you understand? The disposals do not capture the additions. The purchases only captures additions and not disposals. So only checking the purchase invoice, the auditor may miss to confirm the completeness of the PPE records. Then of course there is the question on errors or fraud in recording purchases. Errors and fraud in recording purchases. Errors and frauds in recording purchases. That's another reason. Errors or fraud. Errors of fraud in recording purchases invoices, such as omitting items or recording incorrect amounts or values, could lead to misstatement of the PPE. And therefore, testing a sample on invoices may not be sufficient to detect such issues, especially if they are not randomly distributed, because here the only samples are tested. So if there are errors in the purchases invoices, that can not be detected by just sampling the invoices. Do you understand? And therefore, as an auditor, you may be required to carry out additional procedures and not just rely on taking samples of invoices to prove the completeness of the PPE records. And of course, that is just another question which you may be asked. What additional audit procedures should the auditor conduct in order to do what? In order to prove the completeness of the PPE? That's another question, which I know you can answer. So let's move on to part B of this question. When auditing consolidated financial statements, The auditor pays close attention to accounting policies as they have a significant impact on the presentation and disclosure of financial information required. Discuss 5 areas of interest by an auditor in relation to the accounting policies related to consolidated financial statements. I'm aware that you know what accounting policies are. Someone says how intra-group transactions have been eliminated. Candidates, what are accounting policies? Accounting policies are the specific principles, the basis, the conventions, the rules, and also the practices applied by an entity in preparing and presenting financial statements. In simpler terms, they are the specific rules that a company follows when recording and reporting its financial transactions. Accounting policies, we know, guide how a company accounts for assets, liabilities, revenues, and expenses. A good example is a depreciation policy. We have inventory methods of valuing inventory. The FIFO, the LIFO, those are accounting methods, those are policies, those are guidelines on how a company accounts for inventories. We have depreciation policies or methods, straight line method, the reducing value method. Those are policies that a company may put in place, the regulations, the rules to do what? To depreciate assets. So when auditing the financial statement, consolidated financial statement, the auditor should pay close attention to what areas. Discuss 5 areas of interest by an auditor in relation to accounting policies. That's the question. Areas of interest. B. Areas of interest. The auditor in relation to the accounting policies. And as I told you, candidates, the answers are easier than you think or you. When dealing with accounting policy candidates, you have always said that as an accountant, you have to be consistent. Okay, when preparing financial statements, for example, when you are applying the straight line method of depreciation, there has to be that consistency or uniformity of accounting policies, because here we are dealing with consolidated financial statements. So there is the aspect of consistency. There is the aspect of uniformity. So number 1 is consistency. And this is consistency with international financial reporting standards. Consistency with international financial reporting standards. The auditor needs to ensure that the accounting policies adopted by the parent company and its subsidiaries are consistent with international financial reporting standards. Do you understand? Because that is crucial to ensure comparability across different periods and even comparability with other companies. when you come in as an auditor or consolidated financial statements, this is a group of companies. So one area of interest for you as an auditor is to check if the group of companies consistently applied accounting principles that are in line with the international financial reporting standards. You need to ensure that the accounting policies that are adopted by the parent company and its subsidiaries are consistent with the IFRSs. Number 2, uniformity. Uniformity. And this is the uniformity of accounting policies. Of accounting policies. The accounting policies must be applied uniformly. As an auditor, you should assess whether the accounting policies are applied uniformly across all the subsidiaries, because then that ensures consistency in the preparation of financial statements and prevents misleading results due to varying accounting treatments. Now that you have a clue, please give me the other areas of interest. Felisa says recognition and measurement of goodwill. Any other attempt? Any other attempt? The third area of interest is identification of related party transactions. Identification of related party transactions. Identification of related party transactions. The auditor should examine the accounting policies related to related parties transactions to ensure that they are transparent or they are adequately disclosed in the consolidated financial statements. That's it's important to prevent potential conflicts of interest and also to enhance transparency. Identification of related party transactions. The fourth area of interest is to do with consolidation adjustments. Consolidation adjustments. Consolidation adjustments. The auditor reviews the accounting policies related to consolidation adjustments, such as elimination of intercompany transactions, such as unrealized profits, and so on, because that is essential to ensure that consolidated financial statements reflect accurately the financial position and performance of the group as a whole. So you have to give 5 areas. These are 4. Now, the fifth area of interest is to do with disclosure of the significant accounting policies. Disclosure of significant accounting policies. Disclosure of significant accounting policies. The auditor should verify that all significant accounting policies are adequately disclosed in the notes to the consolidated financial statements. Why? Because that provides users of the financial statements with the sufficient information to understand the basis of preparation and the potential impact of different accounting policies. So these are the 5 areas. 1, consistency with IFRSs. Number 2, uniformity of accounting policies. Number 3, identification of related party transactions, datation adjustments. Then lastly, we have disclosure of significant accounting policies, 10 marks. In part A, strengths and how each strength reduces the control risk. 1, 2, 3, 4, any 3 points here would earn you the marks. Reasons why testing of representative sample of purchases invoices is not sufficient. 1, 2, 3, 4. So candidates, that marks the end of the lesson. Please continue attempting the questions. We've completed April 2024. When we meet next time, we are going to answer questions from the sitting that was done in December 2023. Please go through it so that when we meet here, it should not be that you are reading the question for the first time. Try out the questions on your own. When you come to that class, don't come with your notes. Just come with a question paper and practice. When I ask you questions, you can practice to recall. Right? Yeah.